All right, thank you so much for sticking with us. We proceed with our morning program. This is Good Morning Kenya. And of course, we value your presence, we value your feedback. The hashtag, as always, is still Good Morning Kenya at KBC Channel 1, which is the official station handle. Thank you so much for sticking with us and choosing KBC Channel 1, your #1 channel of choice this fine Tuesday morning. My name is Aguko. It's Entrepreneurship Tuesday. And this morning, we want to shift gears into matters concerning managing cash flow. Now, how can you maintain your steady flow of income? Is it possible for you to manage how you spend your money? Everybody's talking about high cost of living. Everybody's talking about the taxation rate in the country. Everybody's talking about how the prices of commodities have increased. But how can you maintain your own cash flow? Well, to help us in this conversation today, I am with Edwin Muchira. He is a business development expert. Karibu sana, Edwin.
Asante sana.
And of course, even as we start this conversation, I want you to highlight for me, because I'm looking at the state of the economy, okay? And this conversation is coming at a very interesting time where we're looking at the CBK. We are now going to receive a new CBK governor, right?
Yes.
And as you open your remarks, how can somebody watching us today ensure that they maintain or keep a steady flow of cash regardless of what's happening in the country?
Thank you, Ram, and good morning. Steady flow of income, or rather cash flow management aspect, is something relevant that each and every individual should look at. Right now, the economy is dwindling, and currently the disposable income is on the low. With the increase in taxes, and so to speak, when you look at the incoming new governor, we're really hoping that he's going to have new monetary policies that are going to help us in managing more cash flow.
Exactly.
Yes.
Yeah.
So looking at it, the whole point of managing cash flow is to look at what is money, where money has come from, and where money is supposed to be going, and what is money in particular. So everyone actually knows that money is a measure of wealth, is a store of wealth. However, money at the same time can be utilized as a form of information. What do I mean? If you don't have money, then you cannot move certain products, cannot buy certain goods. You're talking about sugar going up, you're talking about unga going up. Money is a source of that information for you to attain that. You can have money per se as paper, but they cannot give you the desired outcome in settling your debts. So when you talk about the new CBK coming in, we all know the CBK's role, and the role is to managing the country's cash flow, and it affects that since it by the government purchasing bonds and treasury bills from them, they can be able to broaden their perspectives by be able to selling more to Kenyans. So that way, when they sell the same, they can be able to have enough income for them to have infrastructure development being done.
Now, Edwin, from my side, and I know we're going to talk deeper into this conversation, do we have money? We're talking about cash flow. Do we have money? Where is the money?
Money is created.
Money is created.
Money is created, and CBK's major role is to create money. The balance sheet of the CBK is way bigger than the country's GDP. That is well known. And the whole purpose of the CBK is to ensure that there's equilibrium balance in regards to cash flow that is within the system. So money is in a shortfall. Money as a character is scarce, and the more scarce the money is, the more valuable the money is. The
more valuable the money is.
Yes.
And I'm looking at how Kenyans are right now, crying of the high cost of living, taxation. At a time like this, is financial stability still a terminology that we can have as a vocabulary?
At any point in time of a person's individual can change their trajectory on financial stability or financial growth. I do believe that can actually happen by ensuring that individuals invest or divest in areas where money actually comes from. So the government will look at more bonds, external and internal. Individuals will look at what drives the GDP.
Yes.
Some look at tourism, some look at agriculture. Right now, tourism is soaring to greater heights. Agriculture, the export of agriculture produce like avocados, mangoes currently is really soaring currently as we speak because it's the peak season. Internally, I think we need to broaden our basket in terms of income base. And by that, Kenyans need to start doing more in terms of income, getting passive incomes for them to be able to forge forward. Yes.
Now, and I'm glad that the conversation is going that direction, because my next question is salaries versus businesses. I'm looking at the sources of income that we need to consider. From where you sit, how many should an average Kenyan have in terms of sources of income?
Before we go to that, I think the MSCs, the micro small enterprises, based on the study done way back in 2005,
yes,
there is 18.5% of the country's GDP. Right now it has almost slightly upped by another 5 to 6%. Kenyans mostly are salaried. However, they need two streams of income, so currently for them to sustain their necessities. Reason being now is that the current deductions that you're having does not commensurate with their expenses. So it is advisable to pick up an extra passive income, or rather an MSE.
And but now the question is, how many sources of income should I have for me to be comfortable?
Comfortable is relative.
Comfortable is relative.
Comfortable is relative, and is based on individual. I think what would happen for this particular individual to know how many streams of income one would require is, have they really jotted down exactly what are their expenses? Have they really jotted down what are they expecting in terms of their income?
I love that. I love
that. Spend that. So if they don't articulate down exactly or table down what are their expenses, how are they going to meet these expenses, how are we going to cut down some of the expenses because of the low disposable income, or rather, so to speak, is what are the bare minimums?
Yes.
So once you get the bare minimums, then that's where what defines if you can be able to get an extra income, and what does that mean? Currently, with our digital age, it is equally okay for you to get a secondary income that will not interfere with your 8 to 5. So I think that is a direction that people need to go.
Now, give me financial advice here. Should I, or is it advisable for someone to resign from their job in order for them to concentrate on a particular business, or is it advisable to have both at the same time?
It is said that if you use your passion, then you really grow. So there are some experts say that if you do a job, do it really good. If you're an employee, be an extremely good employee. Even business, be an extremely good business person. However, there's always an in-between. There's always a gray area. Nothing is black and white. There's always that gray area. And that gray area really comes at a point where your disposable income, based on external factors like taxes, have really taken a lot more than what you expect from your disposable income, or rather what people call their net income. So that's why you really need to go to your passive income. Again, there's also the flip side. There are guys in business, and business they have supplied somewhere, they're taking time to get paid, but they need to be alive when they get paid. So they still need to get an 8 to 5 job. So to them, that is also a secondary income. And the business is a primary income, noting that now the payments is taking longer than desired, especially if you take your commodities to counties, they really take a long time to make those payments. So when that happens...
Tell me about it.
It's everyone's nightmare, but that's also what we do.
Yeah.
So basically the whole point is to ensure that it depends on which side of the coin you are. And remember, the coin has 3 sides, not 2 sides.
Yes. So Yes, I love the fact that you're saying it varies, but which one is more advisable? Still, Edwin, you've not answered my question. Which one is more advisable? Having the salaried one coming in as your main, and then you look for another one, or is it okay if I choose to resign?
Again, to really depend on your policies and policies of your employer. Because there's some employers, there's some jobs that are quite technical. So there's some jobs that actually tell you, you cannot do this to our competitors. And that's where it calls you to have an additional skill set. And there are various platforms that can be able to enable you to be, to add additional skills. So these skills can be utilized elsewhere for you to generate that particular income. So it is not a very straight answer.
And sometimes you can have, you know, your job here as your main one, but you still have time to do business.
Your extra, yes.
Yes, your extra.
Yes. So that's why people talk about passive and active incomes. So once that is well tabled, it becomes very easy. For instance, when you buy treasury bills and bonds, that's a passive income. That does not really need you to work on a daily basis. The rates do the work for you. Like such, if you're perhaps exporting avocados, that is something that happens only 4 months in a year. You don't really need to do that the whole year. You can have 8 to 5 running around. Yes.
Now, this is a very complicated scenario here, and I have seen even our political leaders mention this particular statement, and they say that you cannot operate without debts. Yes. Is that true? Is that a statement that as an individual I can work with? Can I live debt free? The desire or what is sold to us is that we should be debt free. Unfortunately, we can't live without debt. We can't live without debt.
Yes.
So we should accept it and say, you know what, just take the loan, it's normal. You cannot say it's like being put into chains for slavery.
I think debt is a measure of means, or rather a means to an end, and debt could be structured in different form of ways. For instance, you can have savings and buy treasury bills, use these bills as security for your facility or your loan, and then have your free cash doing the extra income. So it's all about managing that cash flow. The whole point is analyzing what the amount of money that you have. You look at what you can actually monetize, and for additionally always go back to debt. Again, there are some facilities that you take that ensure that you get tax rebates. So why don't you take advantage of the same? So
there are facilities that have that?
Yes.
Okay. Right.
Because now when you go to business, when you take a facility or a loan, it's a cost and it's an expense. So in your books, it's an expense. So what does an expense do to your books? It lowers your profits. What does lowering your profits do? It gives you an amount less that you need to pay in regards to taxes on corporate tax, which is about 30%. So yes, you'll have more on you rather than giving out. That's more of cash flow management.
Right.
For instance, let's say your business is perfect. Your earnings about ₦1 million on a cash flow basis, and you have a new job that needs half of that amount of money. You see, it is still your money. So when the profits coming, 30% of that goes on corporate tax, goes to the government, and still have 16% goes back to the government. However, if you pick this facility at probably the average rate right now is between 13 to 14.5% at the bank rate. Once you pick that as a facility, there's a cost element in your books of about 14.5%. That again translates to again they need to put a provision of that if they're not going to pay your debts. There's a provision of another bad debts, which will increase that debt virtually to around 20%. So when you boil down to your profits, you don't necessarily need to pay corporate tax, but you have cash flow, which is really important for you to move to the next level.
All right.
So debt, in a way, can be utilized to create wealth, or rather to create more additional income, if well planned out.
So you can be wealthy, but in debt?
Yes and no.
Yes and no.
Yes and no.
Is it? Okay. Elaborate on that. What do you mean?
The individuals who are massively in debt, they cannot be wealthy. However, if you have individuals who have incorporations or other limited companies that are running everything, then they can be wealthy, and the company, which is a natural person, takes the heavy lifting. So, and as an individual, you can be wealthy, but your company is, yes, it is a going concern. However, it is deep in debt.
Okay. So, being rich and being in debt can also happen at the same time. Remember, I know somebody may confuse the words wealth and riches. No, I know
that's true.
That's still another conversation again.
That's a whole new conversation.
A whole new conversation.
Yes.
But I know you guys understand what you're saying here. Being in debt and having money can happen at the same time, and it's still okay.
Yeah. Let me give an example of government. I think the best example to use is government.
Yes.
Government doesn't have money, so to speak. CBK creates the regulations, the policies to manage the same debt. When government needs money, they sell, or rather they buy treasury bills from the CBK. The CBK in turn sells these assets to Kenyans. So the Kenyans buy it at around 9% currently for an 81-day bond or bill. And then the government buys it back. Basically, what is a bill? It is a promissory note. It's a piece of paper saying, in 181 days, I'm going to pay you back. That is debt.
Do Kenyans know this thing?
I hope they do. So once that promissory note is advanced to the government, or rather the government has advanced the real money, now they can use the money to do infrastructure projects, social development projects. This in turn will create more income to the individuals in those sectors, and that way they can be able to develop, or rather bring in more income. So giving the government more time. So what happens in 181 days, and whatever the government has done has not brought in the revenue that it deserves, or rather the taxes. They issue another promissory note for another 181 days, and that one pays this debt. So when you look at that, it's government is on debt basis. So the whole point is actually to manage the debt and make it as more external as possible, because the people paying the internal debt are the taxpayers.
So are you saying that even as we talk about government debt, we ought not to say that, you know what, the government is always in debt? It should be, it's something that can actually work for the development of all Kenyans when the government is in debt. Is that what you're saying?
Indeed. And the government at any particular point in time should be on a controlled debt spree, so to speak, so that to manage the inflation.
All right. So it's about controlling the debt that the country gets into.
Yes.
All right. Now, still, we're talking about managing cash flow management, and we are referring to how debt can help somebody. But then I'm looking at people who are always in debt. They're always the ones who call you. When you see their their number go through,
you know.
Huyu anataka pesa huyu. You know. I know you have those people in your contacts that whenever they call you, you know that they just need money. How can I, as an individual, maintain or manage my cash flow regardless of all the expenses, in quote, that I am supposed to incur? And by expenses, I'm talking about, one, those who keep on calling me to ask for money. And they may not be friends who keep on borrowing. They could be family, friends, they could be relatives, they could be the in-laws that I have. But how can I maintain my cash flow? I am being added on WhatsApp groups for funerals, for weddings, for birthdays, and many other things that I may not be able to mention, including bridal showers and the rest. How can I maintain my cash flow, my brother?
If you can recall one of Chinua Achebe's books, he mentioned there's a bird called the Neke, and the Neke, the bird, said that he learned to fly without patching. When man learned to fly, learned to shoot without missing. This is relevant based on cash flow management.
Yes, okay.
Because Eneke being you, the individual, and the man shooting without missing is basically the expenses that are coming in, including the individuals who are making calls to you. So constantly we need to learn how to fly without patching onto the next week. We need to continue flying. So how do you do that?
How do you do that?
So number one, you need to ensure that your income stream is stable. Stable enough, that is having 1 or 2 streams of income coming through. Number two, once that income is in, it should be well articulated of exactly what needs to be done. Number three is being truthful. Sometimes it doesn't hurt to say no. It is painful, but at times it doesn't hurt to say no.
Edwin, you mean I saw you on KBC? You are doing a very good interview. I'm calling you, I'm asking for money, and you are telling me you don't have money. My brother, they will not believe you.
Yes, sometimes. The same way when you walk to an institution, a financial institution,
yes,
they tell you currently you do not qualify. So sometimes you need to be the bearer of bad news. And that is, managing that debt is really important, and ensuring that sometimes you say no, because probably you really are stretched to your limit in terms of budget items. So sometimes it is not wrong to say
okay
no.
to say no.
Yes. So part of the question is about family. Sometimes when a family calls, it is usually an emergency. So that goes back to you. Do you have a contingency plan? Do you have a savings plan? Do you have something that is running that is going to ensure that you're going to meet this? How are you going to cater for this? And the fifth bit would be probably you need to be well knowledgeable in this aspect. And currently, with the information age that we have, the information is quite relevant and available to everyone to study. So that, because for you to succeed, you really need to learn what you need to stop doing and what you need to start doing.
Okay.
Yes.
Okay. What you need to stop doing, what you need to start doing. Now, even as I am saying no and learning to say no to friends, I know that those who are watching us today and they are struggling to manage their cash flow, struggling so much. They end up borrowing to offset some of these demands. Your family has called you, they need a particular amount. You borrow money and send to this particular basket. But you see, you are in debt. You could not tell them that you don't have money because they believe you do, or they expect that you are the one to provide. How do you get out of that?
Part of it would be the individuals, as you say, they go into debt not willingly, and mostly it's because they want a business or their personality to flourish.
Yes.
So sometimes the hard decisions need to be made. By hard decisions is, for instance, if it is a business, you really need to have someone run it for you. And sometimes that is easier said than done. It's extremely difficult. This is my baby. I know this from A to Z. Why are you here?
Why me?
Why are you telling me what to do? But you really need that extra person to do the same, because some things will change. For instance, when you are a sole proprietor, so to speak, or rather you are the manager and the owner and the everything, the profit from the proceeds is basically your money.
Okay.
So with that, what does that mean? You'll spend it. However, if you have someone who's working for you and they're going to give you a salary, so to speak, from your own business, and might even go down to maybe 20% of the income that is coming in to be your salary. So that is an aspect on business. If you can have someone to be able to manage your business, you can be able to get out of debt instead of going to go way down to insolvency and getting auctioned. Before it gets to that point, you really need to get someone professional to do your books, or rather to manage your operational activities, and most importantly, follow that advice.
Okay, but Edwin, I'm looking at this common belief that if I have a business, I need to be there as the owner throughout, and most advisably for the first few months. I don't know whether you'd advise that for the first 6 or 7 months or 8 months to be there as the owner of this particular business, or as the sole proprietor. Is that advisable, and is that the way to go?
That is very true. When you're starting up the business, you need to be really there.
Because you need to maintain that cash flow.
Yes, you need to maintain that cash flow. You need to actually do the sales yourself. You need to make those calls yourself. You need to ensure that the deliveries are done.
Exactly.
You need to really understand your business so that in order, if you're bringing someone on board, you can actually be able to show them how things need to be done. So the first couple of months, probably you might be in charge. It will be advisable when certain figures started getting in. It is advisable to start getting other individuals to come take up the role. Yes.
Like how many months?
It will depend on the income flow. There are some, what would say to be, look at your statements, what you do in a year, and if you triple that, get someone to help you.
All right.
Yes.
Okay. If you triple that, get someone to help you. Now, let me move still to something else. We are talking about managing cash flow, and I'm interested in understanding this. How can I manage cash flow regardless of spending? Overspending, overpurchase of
Unnecessary goods.
unnecessary goods. How can I do that? And of course, you're going to answer that after we take this short break, and then we will be back. You will tell me, what about you know, when I'm in a scenario that the person I am with could be a girlfriend or some side chick or a wife or something, you know, they want money. They
want more.
They want more. You'll answer that question after we take this particular short commercial break. We'll be back in a bit. Keep it KBC Channel 1. Yes, thank you so much for staying with us. We proceed with the conversation on cash flow management. And of course, I invite you to be part of this conversation. The hashtag is Good Morning Kenya. My handle is at Aguko. And of course, if you've just joined us, this is Good Morning Kenya. Thank you so much for choosing KBC Channel 1. I am still with Edwin, Macai Muchira, business development expert. Before we took that break, we were talking about debt and you know, cash flow management issues and challenges that we face. But now let's talk about spending now. Yes. Spending.
Spending is it's something that really takes a lot of your cash flow, or rather a lot of your disposable income.
Yeah.
And managing that is quite a task. Why is that? Because most individuals don't track the expenses. They have a budget, but they don't follow through it. So how do you do that?
You know, sometimes you just say, all I know is I need to buy this and this and this. But when you get to the store, you realize, I should have added this into the list.
Yes. So sometimes that really goes way beyond, and there are measures that you can put in place.
Okay.
If you're the sort of person who swipes, don't carry that card. If the person who always have, if so long as you have M-Pesa, you can move with the M-Pesa. Just have what is enough. And also there are applications in our phones these days can actually track your budgets. Very simple. When you purchase something, just input like an input. If it is if you're getting money, just put it in there. So you can easily track your expenses or your spending. Why is that important? If you don't really know what you spend at the end of the day or the end of the week, you can easily overspend the following week. You can easily go ahead and say, now that I broke bank and got paid, I cannot go to my Range Rover.
And we all know those friends. When they have money, you will know they have money.
Indeed.
I think all of us have such kind of people.
Indeed.
Yeah.
And sometimes influence goes to a point where you overspend and really boils down to going back to bad debt. Debt that is not sustainable. Debt that does not bring any income coming through. So even though we say that debt is good, debt is actually bad if you're using the debt to have your consumables moving along.
Borrowing to consume.
That's wrong.
Wrong.
Yes.
You should borrow to
invest.
To invest.
To divest, yes.
I love that. I love that.
Because the challenge, the more you go deep, their disposable income still goes lower, and there's no way you can be able to come back to that. So the best way is to manage in that. Now track it. Once you have it tracked and know this is exactly what I need to do, monitor it. By monitor it, you have an app. There are so many now out there. They are free. So once you can be able to monitor, you can make adjustments. If now you're doing shopping of 10,000 and now 10,000 is, or are the items worth 10,000 and they're no longer worth 10,000, the worth of 1,000, need to cut back on something and maintain on your 10,000. Yes.
And how frequent should we spend? Should we have limits in terms of spending per week or per day or per month? I want to do a particular shopping. How many sets should it be divided or subdivided into for an individual?
Majorly look at 3 segments, three major segments of your income. And of course, since you're running every day, you need to spend most of your money on your expenses. So it goes around 60% of your income. 60% of your income should go to your expenses.
You've already started dividing that money. Okay.
Yes.
Should we go there? Let's go there.
All right.
So you we are dividing this money that we have 100%.
Yes.
Correct. But still, I know you'd go back to my previous question in terms of expenditure. How many times should you head over to the supermarket?
Yes.
And do you have any limit? But proceed. I'm calculating with you here.
Okay. So as you were saying, you need to divide that money into what you call percentages. One, need contingency, you need to, or rather savings, you need to add retirement to it. At the same time, you also need to look at your expenses, or rather your daily expenses, which now went to your earlier question about how many times should you divide it. So sometimes you can really go, I would propose you can go on a daily basis. You always track the elements on a daily basis to ensure that you can be able to pick up the expenses. Yes.
All right. Now, there is a question that I have from a very interesting friend of mine, Kolo Kini. And he has asked, he's saying, Ram, you're talking a lot about managing cash flow, but your pesa hakuna. Tell us, how do we make this money that we are supposed to manage? Then you can answer that question from Okin.
That's true. Sometimes we forget what are the sources of money.
Yes.
Where can we get that money from? How do we raise that money, so to speak? You have a business idea, it's fantastic. You have a fantastic business plan. How are you going to actualize it? You have done the work. You've gone to, if you're a youth, you've got the Aguko.
Yeah.
And then now
and all the government.
You have everything. Now you have the LPO, then boom, you don't have money. What do you do? How do you get that extra mile?
Yes.
So that now you get paid, then start managing this money. So that's a really key question. And I'll play to that. The institutions in Kenya that are very good in these aspects. So number one, everyone runs to the bank, but unfortunately the bank is governed by various strict rules that are addressed by the CBK, or rather governed by the CBK.
And these are the rules that influence their interest rates and the percentages there.
Yes. So a lot of people get stuck because they go there and they get resounding no. So there are the institutions, the other commercial institutions, reputable credit facilities. They can actually give you the right credit in terms of LPO financing, working capital solutions. They can be able to raise up. One of it is what the credit capitals. They can give you the same thing. There's government institutions that is KBC, Kenya Development Corporation. They can give you advances on the same. You can get guarantees done by like the African Guarantee Fund. They have, which can actually come and guarantee a facility for you to do that particular job. So these are sources of income that, if you look at it, it's what we're talking about. It's all debt. These are all debt streams.
All
but,
of them.
But manageable debt streams. So these manageable debt streams, you can be able to forge the way forward, whereby now you can now be able to generate that income stream, so that now you can be able to call the likes of Edwin to manage it.
And Edwin will come.
And Edwin will come and have a bill.
Now let's come back to that particular conversation that we had before that question. We are dividing this particular money. We have the 100%. You mentioned 60% goes to what again? We are remaining with 40.
60% goes to your rent, to your fuel, to your bus fare, to your food. It's everything that you need to do for you to survive till the next paycheck.
Yes. So from wherever you're watching us from, what you can do so that you better understand this conversation and it can help you as an individual, okay? Do this. Take that particular amount of money that you have, get a calculator, okay? And your amount of money, whether it is 100 shillings or 10,000 shillings, that is your 100%. 60% of that, Edwin, you're saying 60% of what you're earning,
yes,
rent, expenditures,
yes,
expenses,
your recurring expenditure, what you use on a monthly basis, on
water bills,
yes, each and everything what we call a recurring expenditure. That's why you need to limit that to ensure that your recurring expenditure does not go surpass your 60% of your income. Because if it surpasses that, then you're done.
Then if you calculate and you realize, adding your rent plus water bill plus electricity plus
car loan,
salon,
etc.
If you are someone that uses a lot of nini, which other Joy is giving me signal? Food, yes, food. My camera operator here is talking about food. And if you like buying those expensive things on your head, calculate them, find out how much it is. If it is more than 60% of your salary,
you're done.
You're misusing your money.
Yes.
Correct? What about the other 40% remaining?
The 40% should be divided into other streams as well. There's savings, there's retirement. People don't talk about retirement. But there's retirement. And people confuse savings and contingency or emergency money.
Okay. Shed the light there. What's the difference between those
savings? So there's savings, there's retirement, and there is contingency or emergency money. If you recall the earlier conversation where you get a frantic call from your family member and it's urgent, it needs to be done now, that is a contingency money.
Contingency.
Yes.
So contingency and saving, those are two different baskets?
Yes, because now savings is up to you and your family. You understand?
All right.
So that now this is what you save. If you want to buy a nice phone, that's what you can save for. If you want to do maybe a new couch, that you can save, or maybe a deposit for a new car, that is where you put your streaming in. But if you mix the savings and the contingency, you won't get that phone, you won't get that car, you won't get that new house that you want.
So what should contingency money be used for? If you've already used money for the parents and all those people that need money, you've already used it from the savings basket. That's
the point. You need to split it. You need to split it. So savings most of the time takes about 10% of your income, and there's a general rule: you save first before you spend. So you start with the 10% where you save before you go to your 60%. So basically now you're looking at 30% that is left, right?
Yes.
So 30% again, you split it into half, 15-15, where you go 15% goes to your contingency and 15 goes to your retirement. Yes. And
let me add something that I know many people do not hear this often, or there are many that have heard this often, especially when they go to church. 10% for tithe, brother. Why is it? Yeah.
That is a personal decision. That is a personal decision, and a religious decision after that.
Yes.
Do you remember your 60% that is a recurring expenditure? You can remove that 10% from there. So spend 50%, have 10% go to your local church if you're a religious person. Because again, unfortunately you don't look at that way, but it is a recurring expenditure. it is an expense on a monthly basis.
It's something you use every month.
Yes, that's what I'm saying. Sometimes if your income is lower, you need also to reduce your tithe. It's the same thing. If it is 50% and you are not getting that 50%, it goes lower.
Okay.
So it is something that people don't like to have a word talk about it much.
It's very
sensitive.
Yeah.
However, it is really important to have that going yourself.
All right.
So it's also part of plan. It's part of your electricity bill.
Now, there's something that you mentioned earlier, and you've mentioned it like twice now, or thrice. Retirement. All right. Let's talk about those who have already retired. How can they fit into this conversation? Remember, they also need steady flow of cash, and cash flow management is important for them also.
That's very true. So for individuals who are past their formative years and they're on retirement age, they can look at those streams in a different way. So I always like to go down to where I get a lot of GDP from and what is capable. And currently, other than tourism, the next is agriculture. So agriculture-based solutions or agriculture-based activity can foster growth for these segments. And they do not need to have an income stream for them to do this, because institutions like the Chamber of Commerce can afford or rather offer a lot of information based on the quality of the proceeds that they need to produce or rather purchase from farmers and sell to the market. The market streams are there. I would also encourage, if that segment can also visit, there are usually conferences that goes around in town and all across. That includes CALDRO. CALDRO does a lot of capacity building to farmers, capacity building in relation to ensuring that you know what you need to do and what is the actual gap that is actually there for you to be able to go forward. The other point is this being an entrepreneurship weekday, it's more of about what Mohammed Yunus did, that is get all of them together, not form a chama, so to speak, but work together in a form where they can be able to have the numbers for them to be able to grow. By grow, I mean they can be able to come together, they can bring their small or subsistence produce and sell it to a bigger market with a big voice. Yes.
Wow.
So it's all about disruptive thinking, disruptive innovation. Even though you are way past your formative years, there are streams of doing, let's say, for instance, in an area that does bananas, all of you can come together and come up with a circle society where now as one group you can sell this produce and get better returns on the same. So the segment is also not out. They have wealth of information, wealth of experience. They can actually, if well organized, can make a ton of money. Yes.
As opposed to, every month you keep on sending money to shags every time. So it will help them when they are also working and they're at home.
Yes.
Right. Final question, my brother, even as we bring this conversation to a close here, I'm looking at some other tips of, or rules that we need to follow, tips on how we can improve our cash flow as we bring this conversation to a close. Something that maybe we've not mentioned that you'd like to advise Kenyans watching us today.
So, I think most of it you have covered, other than ensuring that you understand what is money and where money comes from and how you can be able to manage that. So that is what majorly look at the rules. So the rules of money, basically, if you know exactly what you require, that is a budgeted list.
Yes.
And then you understand that money is scarce, and the scarcity of it brings demand to certain commodities. Now you go to those commodities. Now with those commodities, you need to look at income streams or other sources of money where you can be able to borrow or at the same time capitalize. That is coming together, capitalize, so that you can be able to forge forward. And then the other aspect is to know that also money itself requires for you to be able to buy assets, because money does depreciate over time. So to avoid storing money in their bank account need to have it on certain assets that actually add value instead of depreciating.
Should not keep money in the bank. Saving money in the bank, not advisable.
The bank itself doesn't save money. They lend to you. So why should you save money in the first place?
So don't put money in the bank in the name of I'm saving.
No.
I'm looking at other things that are there also. Bonds.
Yes.
Right? Money markets.
Money markets, bonds, treasury bills. Of course, you need to get retirement benefits, RBA certified schemes. Those are well in for you to be able to manage your retirement. You have money markets that can be able to bring short-term income. By short-term, I'm looking at 1 year or 1 year and a half, 18 months. These are income streams that can be able to help you broaden your capital base, so to speak. Yes.
And even as you talk about that, how can I manage to or study my cash flow? Yes, you mentioned that when we started, that you need to study how you spend money.
Yes.
But how can I do that? What is this aspect of studying money? Is it basically just calculating, so I spend this and this and this, and then you leave it at that?
It really does go down to picking a pen and a piece of paper and writing today I bought bread at this much. It goes to that micro level.
What about that level, that money that I give to that watchman or that particular guy that I met on the streets of Nairobi who said, oh, you know, I'm suffering. Is that also something you need to?
Remember, you divided your money into various segments.
Yes, yes.
And the contingency, or rather money that you have not planned for to utilize, that's why the segment. If you remember, part of the money is part of the use of money is being philanthropic. So that goes to the donation of church, donation to that street child.
Because
that is
in the 100% of you did not mention that aspect of philanthropy. I don't know where it falls. Is it rather the 50%?
No, it is still on a personal level, and sometimes can really go to the last segment when you're looking at not the savings but the contingency.
All right.
Yes. Because that is not that's something you can really do away with. If you don't have it, you can really do away with. The 60% is really something you cannot do away with.
You cannot do away with it.
You cannot do away with. You need your KPLC tokens. You cannot really do away with that.
I'm looking at still, my director has told me that he has given us a few more minutes to tackle something more, and I'm interested in understanding this. Sometimes we have opportunities that are there that we get to miss just because we are not aware.
Yes.
The Bible says people suffer for lack of knowledge.
Lack of knowledge.
What are some of those things that you look at and you say, I wish Kenyans knew this, especially when it comes to this conversation of cash flow management? What I can say, Kenya institutions, like Kenya Chamber of Commerce, they have a load of information. They have so much information regarding our markets, so much information of the demands that our markets and external markets, they have. They can actually connect you to the other Chamber of Commerce in that particular country, demand country. They can be able to give you streams of ways to be able to raise money. The institutions, let's say like youth funds, they do capacity building to youth to teach them how they're going to do their business, how they're going to manage their cash flow. There are such institutions. There are institutions that sometimes you create something, but someone else has taken away. There's Kenya patent. That is KIPI. You need to also register, and it's inexpensive. You need to go there and register your items there. So there are certain elements, as you say, and those institutions are key. And each and every segment or sector has a professional body under the arm of the government that is always and ever willing to give this information. Like for instance, you want to start something on ICT, there's ICT Authority of Kenya. You can always pop in there and have a conversation with one of them. They can be able to guide you on the guidelines. The same needs to be registered at CA. You can just pop in. These are institutions that are public and they're open, then they give so much wealth of information. Wow.
Yes.
And if only Kenyans took advantage of these platforms.
If only we took 10% of that information, we really go far. Really go far.
But we don't. Some don't.
We need to embrace that.
And some of these things are actually online.
Most are online, and everything right now is online. So the best thing is to be proactive, be resilient in the work that you do, and ensure there's a lot of discipline in terms of money management and money usage. Yes.
Thank you so much, Edwin, for that. I really appreciate you, and thank you for coming. And of course, I know that you've managed to help someone today.
Thank you for having me.
And I hope you took your calculator from home. I hope you took your calculator and you calculate. You did the summation, and if 60% of your income has already been taken care of by what? Expenditures, rent, na ikapita, you have a problem.
Iko shida.
Iko shida. That is Edwin Macai, Muchira, a business development expert, joining me today. And ladies and gentlemen, it is on that note that we bring this conversation to a close right here. It has been a pleasure being with you from the start of this show, and now we've come to the end of this morning conversation that is in regards to Good Morning Kenya. But still, News Check is coming up in a bit. We shall be taking a look at many more stories making headlines and keeping you updated and informed. This is KBC Channel 1. My name is Ram Aguko. On behalf of everybody that ensured this show was a success, may God bless you. May God bless the work of your hands. Keep on saving, keep on investing.